Secretary of the branch, CAG Vasudevamurthy, my dear committee colleagues, our chairmen of the branch, senior members of the profession, and the members attended for today's session. A very good evening to one and all. Today's topic, when I heard of the topic, I was surprised at how many members will be of advantage of this. But when the speaker told, it's a very welcome note that speaker himself has opted for this topic and given a chance to Visakhapatnam branch to take up this session. Our 2019, a scheme of Invest in India, introduced by the central government. As Anil said, always we pay to the government, but government is paying to our clients or our customers. So this is a good opportunity for all of us how to get that advantage from the government. So coming to this, today the speaker is going to give what are the advantages involved into this scheme and also the compliances, the written formats, as well as who should go for it, why we should go for it, and the comparing schemes as well. So we are very happy, Anil, for giving us the opportunity. Hope the members will get advantage out of this topic. Thank you. I request Prashant. Prashant, are you available? Yeah, Prashant, to introduce the speaker.
Good evening, members. Here Anil Kumar Bezawada, the qualified chartered accountant. In the year 2011, also a qualified contract and management accountant. He completed his bachelor's degree in the law of Osmania University. He specialized in consultation of audit and delegation in all indirect tax, including foreign trade policy, EOU, and SEZ. He is before customs, excise, and service tax appellate tribunal and all educating authorities on the indirect tax to represent taxpayers. He is active contributor of articles to excise law times and sales tax renews, a leading national tax journals and research. He is visiting faculty of chartered accountants and cost management accounts in Visakhapatnam. Presently is heading Vijay branch of Messrs. Gangi and Associates. With these lines, I introduce CA Anil Bezawada August together.
Thank you, Prashant. I request Anil to take up the session.
Good evening, Chairperson Bharati Devi Garu and other committee members and members, including senior members. At the outset, I would like to convey my gratitude to the committee for giving me this opportunity to talk about this emerging subject. One minute, I will upload the PPT. Yeah, yeah.
Won't give messages after 9 hours.
PDF ನೋಡೋಣ. PDF. 1 minute. Interesting, okay. I hope the PPT visible.
No, it's your mail inbox which we can see.
Okay. Interesting, huh?
Yes, sir. We could see your screen, sir.
Okay. So I will start the session. It is a combination of customs, GST. In a way, it is also touches the foreign trade policy, also the present government economic policies. So this scheme introduced by central government as a part of the Invest India scheme. So there is a website, Invest India website. So that is a separate organization to invest in our country. What are all the opportunities are available? What are all the government schemes? All collated in the one website, Invest India website. So this is a separate organization, nodal agency to take care of the new investments in our country. So today's coverage, some of the basic concepts on import, why this scheme is introduced, what is the legislative government of the scheme, additional financial benefits, what is the incoming or what is the advantage for the businessmen because of this scheme. what is the additional booty? What is the additional booty for the manufacturer from this scheme? Who is eligible? Who is not eligible? So comparison of these schemes with the other existing schemes in the foreign trade policy. Some of the issues involved in this scheme. So this is the emerging concept. In a 6 months span of time, all of us should go through this scheme. Certainly, clients will ask about the scheme advantages and disadvantages. Reason for the same: government, the present foreign trade policy is applicable from the 2015 to 2020. So from the year 2020, they are supposed to introduce the new foreign trade policy. Because of COVID, they could not introduce the new scheme. But April 2021, certainly they are going to introduce the new foreign trade policy. So while they are introducing the new foreign trade policy, government got the doubt. Why should we encourage only exporters? Why don't we encourage the business people who are selling the goods or selling the services in India? So they are also investing in our country. They may be from Indian origin or foreign origin. So they are also investing money in our country. They are also generating the employment opportunities. So why should we encourage the only exporters? Why don't we encourage the domestic sellers? So this is the new idea. So far, incentives, subsidies, all only for the exporters. Now government realized we should support the manufacturers who are selling the goods or service providers who are providing the services in India also. So with this thought process, they have coined the one new scheme. This scheme is called manufacturing and other operations. So it is manufacturing plus other operations in the bonded warehouse. So this is the full form of this scheme. So in due course of time, we are going to discuss the nitty-gritties of the scheme. At the first instance, I request all the participants, this is not relating to the exporters or customs or relating to the pure investments. So this topic is running around GST plus new investments plus exporters plus importers. So by seeing the name, at the first instance, we may thought that this is something not relevant to us. This is something relating to the warehouse, something related to the customs, or something related to the capital investments. So this is not the how the name is resembling. It is certainly introduced for promoting the investments in India. The government wants to strengthen the Make in India scheme, the government wants to enhance the ease of doing business. So if you want to start the business in our country, if anybody wants to start the business in our country, the government should identify the problems faced by the investors, problems faced by the taxpayers, problems faced by the stakeholders. Government should identify the problems and they should give the solutions for the problems. This is the essence of the ease of doing business. So this scheme is also implemented through one website. So we need not meet any government bureaucrats for this scheme. So everything is routed through online, filing the application, filing the returns, processing, everything is through online. Nobody will monitor physically about your activities. So they want to create the hub for electronic assembly, automobile manufacturing. Presently, what is happening? The finished product is straight away imported into our country. So it is manufactured in the foreign country, and since the country is having huge population, so they are able to market the electronic goods, automobile goods in our country. So the government thought process is, why don't that companies manufactures the goods in our country? So let them sell in our country, but after manufacturing the same in our country. So in a way, this scheme is useful for the e-commerce operators also. So whenever they are importing, they need not pay any taxes. So this scheme certainly helps the manufacturing in our country. So why this scheme is introduced? So WTO World Trade Organization is the superior body of regulating the trade across the world. So WTO prescribes certain norms for the international trade. So US government filed one complaint with the WTO stating that Indian government is offering the incentives or subsidies to their exporters, which is not in accordance with the WTO international trade norms. So WTO international trade norms, as per the WTO trade norms, member that country should refund or exempt the actual tax incidence for the manufacturers. Suppose from any person, if he is exporting the goods from India to foreign country, the actual taxes incurred by that exporter is eligible for refund or is eligible for the exemption. But some of the schemes in India, irrespective of the actual tax incidence, so the government is granting the lump sum amounts or certain percentage on the export value. Let us say 5% of the sale value of the exporter. So this arbitrary fixation of the incentives, sometimes incentive is depending upon the buyer country. If it is UK, it is 5%. If it is US, 3%. So country to country incentives are differing. Buyer country to country incentives are differing, and the year to year incentives are changing. So the WTO, the objection is, when you are supposed to refund actual taxes, why you are arbitrarily fixing the incentives? They said the some of the schemes in the foreign trade policy, advance authorization, which allows the exporter to import the raw material, packing material, spares, consumables without payment of taxes, or export promotion capital goods, which allows the exporter to import the capital goods without payment of the taxes, or mercantilized export incentive scheme. This is the lumps. This is the incentive the Ministry of Commerce is paying to the exporters. and EOU and SEZ. EOU and SEZ is allowed to import allowed to import the goods without payment of any taxes, allowed to purchase the goods locally without payment of any taxes. So the government, the WTO dispute resolution panel, the objected the schemes. They said it is illegal as per the international trade norms. So that is the reason India is forced to change the foreign trade policy. So the present foreign trade policy, they should scrap it by 21st March 2021. They are supposed to introduce the new foreign trade policy from the April 2021. So as I said, when we are encouraging the exporters, we should also encourage the domestic manufacturers or other businessmen who is investing in our country, who is generating the employment in our country. So to get into the scheme, we require little briefing about the GST and customs on import of goods. So whenever you are importing the goods into our country, as per section 12 of the Customs Act, the importer has to pay the basic customs duty. On what value? The purchase price of the goods from the foreign country. So it is on the value of the goods, the basic customs duty has to be deposited. So along with the basic customs duty, the importer is also supposed to pay the IGST on the import of goods. So we are talking about two taxes. One is basic customs duty, another is IGST on the import of goods. So at the time of import, the importer has to file the bill of entry for paying the taxes. Unless you file the bill of entry, the customs officer will not give you the goods. So this is the basic about the customs to get into the topic. So notification number 69/2019 is the notification through which this MOOWR scheme is introduced in our country. So circular number 34 is, they have clarified the step-by-step process, benefits, how the scheme is working, and they have also issued the frequently asked questions. So some of the doubts what we get, the government also clarified some of the doubts. So whenever we want to read the scheme or whenever we consult the client on the scheme, so these three is the legislative government. So notification 69, circular number 34, FAQs. So as I said, it is a scheme of Invest India introduced by central government. This scheme is basically on import of goods. It is an alternative to the duty exemption schemes under FTP, foreign trade policy. So there are some schemes in the foreign trade policy to alternative to put end to the some of the exemptions in foreign trade policy. This scheme was introduced. So this is an alternative to the exemption schemes under the foreign trade policy. So by 21st March, this foreign trade policy, they are going to scrap it. So from April 21 onwards, they introduce one new policy, but it will not be as elaborative as earlier because already MOOWR is introduced. So 50% of the foreign trade policy is replaced with the MOOWR. So one of the misconception about this scheme. So we may have to export the goods to foreign country to get the benefits under the scheme. You need not export even single consignment to foreign country to avail the benefits under the scheme. So there is no obligation on you. There is no obligation on you to export the goods to foreign country. So this is also for the domestic players who manufacture the goods or service providers who sells their goods in the India. It is somewhat like additional working capital support. Suppose earlier your working capital requirement is 5 crore. Because of this scheme, it will become 4.5 crore. So it is somewhat like supporting your capital requirement. So no need to earn the foreign currency. So there is no minimum value addition requirements. Value addition means suppose your product, your raw material cost is 100 rupees. Your selling price should be more than 100. That means there should be some processing, some margin to your purchase price. So there is no such requirement. You can sell as it is. 100 rupees you purchase, you can sell it for the 100 rupees or 110 rupees without any adding any value to the process. So whole this diagram is explaining the advantage of this scheme. From left hand side from top, you can import the raw materials and capital goods. Whenever you import the raw materials and capital goods, you are supposed to pay the basic customs duty plus IGST. The funda of this scheme, you need not pay at the time of import. So you import, you need not pay the duties. You can directly bring the goods to your factory. Suppose you are also required to purchase the goods from domestic market. So you can purchase the goods from the domestic market also, local market also, but supplier will supply the goods by charging the GST invoice. So procurement side, two angles: imported raw material and capital goods, no need to pay the IGST and basic customs duty. But if you purchase it from the local market, the supplier certainly he charges the GST on his transaction. Suppose he is located in another state, he will charge IGST. If he is located in the same state, he will charge the. If he is located in the same state where you are located, he will charge the CGST and SGST. So this is the procurement side. So now you manufacture the goods, or whenever I said manufacture, it can include any process. It need not be manufactured as we understood in the exercise. So it can be any process. As long as you've done something on the goods, it will become the manufacture. It will become the other operation. So the scheme is for both manufacture plus other operations. So any operation you do to your goods, that will fall under the other operation. So after manufacture, suppose you are exporting the goods to foreign country. Once the manufacture is over, once the processing is over, you are exporting the finished goods to foreign country. So once you export the goods to foreign country, whatever the duty, basic customs duty and IGST, you are not paid at the time of import. So that will be waived off. That will be exempted. That will be eliminated. So as long as you export the goods to foreign country, you need not pay the tax on the import of goods. Sir, I don't have any exports. I am 100% selling locally in our country. So what is the advantage for me? So though you are selling the goods in the local market, at the time of import, you allowed to take your goods without payment of customs duty and IGST. Now you completed your processing, you are ready to sell the goods in the domestic market. You are ready to sell the goods to customer in India. So the scheme says whatever the BCD, IGST, you took the exemption at the time of import on the raw material. On the raw material, you pay at the time of selling of your commodity in the local market. Time gap arrangement. You are supposed to pay the customs duty and IGST at the time of import. So no need to pay at the time of import now. Because of the scheme, you pay at the time of sale of your goods in the local market. So on the raw material, he is supposed to pay the BCD and IGST at the time of selling of his commodity in the local market. But what about the capital goods? So capital goods, as long as capital good is there in the factory, on that capital good forever, on that capital good forever, importer need not pay the customs duty and IGST. So for a manufacturer or for any unit engaged in fabrication or any process, capital goods requirement is the important one. So this scheme is allowing the manufacturers or any other entrepreneurs, you can import the capital goods, don't pay the customs duty and IGST, you keep it in your plant as long as you don't sell the capital good in the market. So the customs department, government of India will not ask the customs duty and GST on the capital good. So this is the advantage of this scheme. You can import the raw material, packing material, spares, consumables, whatever the goods you want, you can import. Presently, you are paying customs duty and IGST. If you opt for the scheme, you need not pay the customs duty and IGST. Apart from the imported raw material, if you require any local materials, you can purchase the goods locally with the GST tax wise. You can avail the input tax credit. You can start your manufacturing activity. You can finish your processing activity. After finishing the processing activity, suppose if you are exporting the goods to, if you are exporting the finished commodity, if you are exporting the resultant commodity to foreign country, so whatever the duty deferment you avail at the time of import of raw material, that will be completely waived, that will be completely exempted. Suppose if you are not exporter, if you are 100%, if you are selling in domestic market, still you are eligible for the benefit. You can opt for the scheme. The advantage for the domestic players, so they get the deferment of duty from the day of procurement of raw material to the day of selling of the goods in the domestic market. Let us say the importer imported the raw material on 1st July, but he is selling the finished commodity by using the raw material on December. So he is getting the duty deferment from July, August, September, October, November, December. 6 months he is getting the duty deferment benefit. This is on raw material, packing material, spares, consumables. If it is a capital good, normally capital plant and machineries, equipments, appliances. Capital goods means what is capitalized in your books of accounts, sir. So that capital good normally
Okay. Thank you, sir.
we don't sell it to anybody. So you, whatever the capital good you imported at the time of import, don't pay the BCD and IGST. As long as you keep that capital good in your factory, as long as you don't sell the capital good in the market. So customs department, government of India will not ask you the BCD and IGST. Though you are selling your goods only in the domestic market, you are not exporter. So this is the advantage of this scheme. So for availing this advantage, what I need to do? You can apply in the Invest India portal by filing one application. You can declare your place of business. as a private bonded facility. This bonded facility is a customs word. Typically, any of your place, it can be even your home also, it can be your warehouse, it can be your factory, it can be your some yard in the Autonagar. So you can declare your place as a place of business in for the benefit of the scheme. So as I said, you can import the raw materials and capital goods without payment of customs duty and IGST. You are allowed to do your activity in the warehouse. You can export the finished product to foreign country. Whatever the goods you imported at the time of procurement. So as long as you export the finished commodity, duty is completely exempted. As long as you sell the finished product in the domestic market. So at the time of raising your sales invoice, you are supposed to pay the IGST and basic customs duty for the imported raw material. So the government is giving the question from the date of purchase to from the date of selling. So the advantage of the scheme is interest is waived. Though you import, in our example, though you imported your goods, raw materials, consumables and packing materials, spares on in the month of July, but you are paying the customs duty in the month of December, the day when you are raising the sale invoice. So 6 months government is foregoing their opportunity cost. So this is the advantage to the businessman. So whenever the person who opted for this scheme, if he is selling the finished good to a person located in India, the transaction is a supply in GST, he will raise the GST invoice. Suppose the buyer is located in the same state where the supplier is also located, CGST plus SGST. Suppose if the buyer is located in another state, the supplier will raise the IGST invoice. So sale invoice is there is no change in the sale invoice. So it is supported, it is a GST sale. So it is supported by tax invoice. Depending upon where the customer is located, the type of tax has to be charged. So the biggest advantage of the scheme is cash flow advantage. As far as the capital goods are concerned, it is complete duty exemption benefit. So though you are selling all of your goods in the local market, if you import the capital goods, you need, it is a permanent exemption of the basic customs duty and IGST. So to opt for the scheme, we need to file one simple application in the Invest India portal. The application name is Annexure A. You should specify where your office is located, in what goods you are dealing. So what is the boundary of your premises? All KYC documents you have to enclose to the application. Next, every month, the person who opted for the scheme, they have to file one return. 1 minute. By 10th of next month, the person who opted for the scheme is supposed to file the return to the government. So in the later slides, we even discuss the format of the return. So single point of approval by the Commissioner of Customs. So he is the nodal officer for monitoring of this entire scheme. We need to file the application in the online. The application will be forwarded to the Commissioner of Customs. So he will go through the application, he will go through the KYC documents, then he will give the permission. So unlimited period of warehousing. Suppose if you import the raw materials on today, that the goods are there in the your factory, let us say for next 10 years, you are not able to use the raw material, you are not able to sell the, or you are not able to sell the finished goods by using this raw material. So you are unable to sold the goods in the local market. So no issue, you need not pay the customs duties, whatever you are liable to pay on the import of goods. So as long as you keep the goods in the your factory, so you need not pay the customs duty, IGST to the government. It is only when you are raising the sales invoice of the finished product, that time only you have to pay the customs duty, whatever the government foregone at the time of import. So no geographical restriction. Geographical restriction means if you talk about SEZ, so we have one SEZ here, Achutapuram. Like that, there are 7 SEZs in our country. So SEZ, if you want to set up SEZ, we have to go to the specific place. Gujarat, Kandla, we have to go and establish our unit in the Kandla. If you want to establish your unit in the SEZ, you have to go to the Achutapuram or you have to go to Cochin for putting your factory. But for this scheme, you need not go anywhere. Whatever your office, whatever your factory, whatever your warehouse, so whatever your facility, that you can declare it as a place of business. So you need not go anywhere for availing the benefit of this scheme. So no renewals once you avail it today, as long as you don't apply for cancellation, so this scheme will be in force. So there is no concept of renewal every year. So this is the written format every month. For November month, we have to file it by 10th of November. If we see the format of this return, first it is showing the receipts. So what are all the goods you imported in this month? Next table, receipts from DTA. DTA means local market. So what are all the goods you purchased from the local market, not from foreign country, local procurements. So any enterprise, it requires both. They require imported material, they require materials from the local market. So the scheme will provide the advantage only on the imported raw materials, not from the local purchased goods. Local purchased goods, supplier will charge the GST, recipient can avail the input tax credit. Third table, goods issued for the manufacturing or other operations. So it is stock register, like, so you imported so many goods. So out of imported goods, how many goods you issued for the manufacturing or other operations? Have you sent your goods for job work? If you have sent your goods to job work, how many goods you got it back from the job worker? So this form is giving an indication that you are allowed even sending the goods to job worker. So you did not pay the duties, whatever the government foregone at the time of import. So job work is also allowed. Next table, resultant products, clearance for export. So whatever the product you manufactured in your factory, if we are exporting the same to foreign country, as I said, the duties are the duties on import is waived. You have to give those details, sir. So how many products you have manufactured in your factory? So out of which how many products you exported to foreign country? So if you see the last boxes of the table, it says duty involved. It doesn't say duty paid. It says duty involved. So you availed the exemption at the time of import. How much is the duty involved pertaining to the export of the finished goods? Next table, resultant product clearance for home consumption. That means local market sales. So out of finished goods, how many goods you sold in the local market? If you see the last boxes of the table, it is asking how much is the duty paid. So you imported raw material without payment of any taxes. You are allowed to manufacture the goods or any other operations in your factory. So now we are selling the goods in the domestic market. At the time of selling the goods in the local market, you are supposed to pay the duty on the imported raw material. So how much you are paying? We have to mention the duty amount there. Imported goods cleared as such. So this is the one of the important facility in the scheme. It says imported goods cleared as such. As such means you are a trader. You purchased the goods from the foreign country. You imported the goods from the foreign country. You have not paid the GST and BCD at the time of import. You can sell the goods in the local market. At the time of selling, the trader is supposed to pay the duties which he got deferment at the time of import. So trader is also eligible for this benefit, but for the trader they have to fix the timelines. 90 days is the time limit. So if he is unable to sell the goods within the 90 days, interest will start kicking from the 91st day. Suppose if he imported the goods in the month of, let us say in the month of October. October 1st he imported the goods. He availed the benefit under the scheme. He sold the goods in the month of March. So he is supposed to pay the BCD and IGST in the month of January itself. So they allowed the benefit for this traders only 90 days. So beyond 90 days, the trader has to pay the BCD and IGST along with the interest at the rate 15%. So this is the distinguishing factor for the trader. Obviously, government they don't encourage the traders who import the goods from the foreign country. So that is the reason they have put the cap for the traders. The duty deferment benefit is eligible only up to 3 months. If they are paying a duty after 3 months, they have to pay along with the interest. So next table is the treatment of waste and refuse, not that much relevant for us. So procedure, at the time of import, we have to file the into-bond bill of entry. Into-bond bill of entry means it is a permission, asking the permission for the deposit of the goods in the warehouse. Warehouse means your factory. Whatever the place of business you declare in your application, that is called warehouse. So that is called bonded facility. So whenever you import the goods from the foreign country, you have to file into bond bill of entry, asking the government, please give the permission. We want to store our goods in our factory. You can receive your goods in the factory. At the time of import, nobody will ask you to pay the BCD and IGST. At the time of selling the finished good in the market, at the time of selling of the finished good in the market, you have to file one ex-bond bill of entry. That means the raw material involved in the finished good is going outside the factory. So you file one ex-bond bill of entry. In that ex-bond bill of entry, you have to pay the both BCD and IGST involved on the resultant product which you are selling in the domestic market. Suppose if you are exporting the finished product to foreign country, still you have to file ex-bond bill of entry, but there is no duty applicable for you. So whatever the duty deferred at the time of import, that is completely waived if you are selling your goods in the foreign country. If you are selling your goods in the local India, then only the question of payment of BCD and IGST will arise. So whatever the GST you are paying now on the raw material, so that will be given as a credit. So BCD is not creditable. IGST is credit. IGST paid on imported raw material is creditable. You can avail ITC and you can offset that ITC against your liability. Now the important question: who should go for the scheme? So if anybody is importing substantial quantity of raw material, should go for this scheme because they are, so this scheme is more beneficial for the regular importers. Another category are the persons, those who are holding the raw material for the long period of time. So if the raw material holding period is more, they can opt for this scheme. If you are importing the machineries, so many cases the existing factories also go for the expansion. If they are going for expansions and if they require some plant and machinery, equipments, appliances from the foreign country, they should certainly look for the benefit of this scheme because BCD rate is 7.5% to 10%. That is not creditable. That will become a cost to the entrepreneur. So if any entrepreneur, if he import the capital good under this scheme, so the duty on capital good is completely waived. This is the biggest advantage. So those who are putting the new plants, new entrepreneurs, those who are starting the substantial expansions of their factories, they should certainly look for this advantage of this scheme. In certain cases, seasonal demand, certain products, they can sell the products only in the one season. That means they are having the huge raw material holding period. So traders also eligible for this benefit. One important point here, those who are benefited more by duty drawback, they should not opt for this scheme because this MOOWR scheme and the duty drawback scheme is mutually dependent on other. If you are receiving the duty drawback, you are not eligible for the benefits of MOOWR. If you are opted for MOOWR, you are not eligible for the duty drawback. Suppose in a quarter, take example, 1st January 2021 to March 2021. You had the you are having exports of 100 crores. You are eligible for duty drawback at the rate 2%. That means 2 crore is the duty drawback amount. In that period, in that quarter, you imported the raw material, you imported the capital goods, the customs duty involved on your imports for that quarter, fourth quarter of 2021, that customs duty is only 20 lakhs. So if you are in MOOWR scheme, you are eligible for the duty exemption benefit of 20 lakhs. But if you are in duty drawback scheme, you are getting the duty drawback of 2 crore. So every entrepreneur, they should sit and calculate the benefit under both the schemes. If they opt for MOOWR, what is the advantage of the BCD exemption? IGST, anyhow, they can take the input as credit in a particular period of time. What is the advantage of the basic customs duty if they are in MOOWR scheme? That is one hand. Another hand, what is the benefit of duty drawback if they are in the duty drawback scheme? So which is the beneficial for that entrepreneur? They should select that option. So all food processing industries in our East Coast belt, all food processing industries, they are eligible for the good amount of duty drawback. They don't have much imports. Hardly they pay 1 or 2 lakhs every month as a customs duty, but every month they will get the duty drawback of 10 to 20 lakhs. So depending upon the industry, depending upon the product, we should select either to go for the duty drawback scheme or MOOWR scheme. So once we call our factory premises as a customs bonded warehouse or warehouse under customs, so people may be under the assumption that the customs officer, they may sit in our factory, or they visit frequently, or to move the material, we should take the permission from the customs officer, or whenever we are selling our finished product, we should take the permission from the customs officer. So nothing. So this was the phenomenon 20-25 years back. Now no customs officer will visit your factory. Only 2% of the total entities will be selected for the audit, that too based on the risk-based assessment. So no customs officer will visit your factory. So nobody will be posted in your factory. There are many CFS in our Vizag. In that CFS container freight stations, customs officers will be posted in that CFS. That means customs officer every day will come to the CFS. His duty is there in the CFS only. From morning to evening, he will be there in the CFS only. If you are opted for the scheme, so no customs officer will be posted in your factory. So no regular visits. You need not take any permission from the customs officer for every of your sale. So this is the chart comparison of various schemes, present schemes with the MOOWR. Obviously, the left hand side, both the schemes, advance authorization and EPCG. This advance authorization is meant for import of raw materials, consumables and packing materials. EPCG is for import of capital goods without payment of duties. From April 2021 onwards, these two schemes government is going to abolish. So here this table is talking about how beneficial about the scheme when compared to the other two schemes. Left hand side, parameters, exemption from payment of customs duty. Exemption from the payment of customs duty. In advance authorization scheme, EPG scheme, it is completely exempted. But in the bonded warehouse MOOWR scheme, it is not completely exemption. If it is a export of finished product, completely exempted. If it is a capital good, completely exempted. If it is a raw material and your finished product you are selling in domestic market, it is a duty deferment scheme. So same the case of IGST and cess also. Third parameter, eligible applicant. Who is eligible applicant? If you see the advanced authorization EPCG, the eligible applicant is manufacturer, exporter. So manufacturer, exporter. Only manufacturer and exporter is eligible for the benefit under the advanced authorization EPCG. In the bonded warehouse, any applicant who satisfies the application form. If anybody who satisfies the columns in the application form, they are eligible for the benefit of the bonded warehouse. Next important parameter, mandatory export obligation. Obligation to export the goods to foreign country if you are in the MOOWR scheme. There is no such obligation. This is the game changer of the MOOWR when compared to all other schemes. If you go for advanced authorization, you should give an undertaking saying that I will fulfill my export obligation. If you apply for advanced authorization, you have to export your goods within 2 years. So nobody knows after 2 years whether your commodity is having a market in the foreign country, or there may be a lockdown, or there may be a recession. We don't know. So this export obligation is the critical thing. So in the EPCG also, there is an export obligation. You should export at least 6 times of the duty saved. In MOOWR, the greatest advantage is you need not be exporter at all. You need not be exporting the goods to foreign country. So there is no commitment from your side. Another parameter, need for import license. In MOOWR scheme, it is a lifetime license. Once you apply today, it will be in force till you apply for cancellation. But in advanced authorization in EPCG, for every authorization you have to apply for the license with the DGFT. Next parameter, validity of license. So there is no expiry for this MOOWR scheme. But in the case of advanced authorization, once you apply for license today, within 12 months you can import the goods from the foreign country. If you don't import within 12 months, that advanced authorization license will become it will expire. EPCG also same thing. Once you apply for license today, within 2 years from today, you are supposed to import the capital goods from foreign country. But if you are in MOOWR, there is no such requirement. Whenever you require, you can import. So the government is not putting any deadlines. Suppose first year you have not imported any raw material or capital goods. You file nil return. So nobody will object to you. Next one, periodicity of license. In the case of EPCG, you are supposed to export the finished good within 6 years. Within 6 years, you have to fulfill your export obligation. If you opt for the benefit of advanced authorization on imported raw material, you have to export within 24 months. You have to export your finished commodity within 24 months. So there is no such requirement or conditions in the MOOWR scheme. Today you import, after 10 years you can sell your finished commodity. No officer will object to you. So that complete relaxation has been given in the MOOWR scheme. We have extracted here only the important parameters. Along with these parameters, there are so many other parameters. If you import any capital good in the EPCG scheme, you have to file the installation certificate within 6 years, within 6 months. So there is no such condition in the MOOWR. In advanced authorization, there is a requirement of minimum value addition of 15%. That means your processing should constitute more than 15%. So there is no such conditions in the MOOWR. It is completely free of various conditions. So this is really called ease of doing business. other ends to CR norms. CR norms means standard input output norms. In the case of advanced authorization EPCG, the foreign trade policy prescribed the input and output norms. Suppose you are a manufacturer of the TV. For manufacturing one TV, how much raw material you required? So there is a standard in the foreign trade policy. So the government will allow to the extent of that standards only. For manufacturing 100 TVs, how much raw material required? That is already prescribed in the foreign trade policy. If you go for benefit of advanced authorization, you have to follow the CR norms. In the case of MOOWR, you declare your standard input output norms. You tell for manufacturing your TV how much raw material, what type of raw material, what is the quantity you require. Whatever the quantity you declare, that will become the final. Another important parameter, actual user condition. If you import any capital good in the EPCG, you cannot sell that capital good in the market. If you sell the capital good in the market, you have to pay the duties foregone by the government. So scheme says you are not supposed to use that capital good for any other purpose other than the purpose indicated in the license. Advanced authorization are same. It is issued based on the actual user condition. You are declaring that you are going to use that raw material in your factory for your manufacturing purposes. You are not allowed to sell in the market. But moreover, even trader is also eligible for import. He can sell in the domestic market. So no restrictions. Last important parameter, admissibility of duty drawback. As I said, you are eligible either for the MOOWR scheme or you are eligible for the benefit of duty drawback. So whether MOOWR or duty drawback, which is most beneficial to you, so that exporter has to arrive with the calculations and accordingly they should opt for the benefit. License redemption compliance. So in the MOOWR scheme, there is no question of redemption. But advanced authorization and EPCG, for each license, after fulfilling your export obligation, you have to file an application with the DGFT with all the details, saying that this is the license, so this is the imported material, so this is how I manufactured the goods, this is how I exported the goods and realized the foreign currency. So therefore, please relieve me from the license obligations. Then they will redeem the exporter from the obligation. So there is no such type of redemptions in the MOOWR scheme. So by comparing this MOOWR scheme with the advanced authorization in EPCG, it is abundantly clear that so nobody will go for the advanced authorization, nobody will go for the EPCG, because MOOWR is not having any conditions. But these two schemes are coming up with a lot of conditions. Again, the WTO dispute resolution panel said this advanced authorization EPCG both are illegal. Both are not in accordance with the subsidy schemes mentioned in the international trade norms prescribed by the WTO. So in a days to come, this MOOWR will replace some of the schemes in the foreign trade policy. So in a days to come, this MOOWR is only the scheme which can be available for the duty exemption. So the government need not prescribe so many schemes. One scheme for capital good, another scheme for raw material, not required. One scheme for exporter, another scheme for importer, not required. One small scheme is going to change the whole of the multiple schemes in our country. So this is a simple scheme which is going to replace the many of the schemes in the days to come. So once the other schemes lapses, this MOOWR will gain the lot of importance. So many people will come and ask the registration in the MOOWR. Once you apply for registration, every month you have to file one return, like our GST return. You have to file one more return to the customs department. So recently government issued one clarification saying that imported raw material can be sent to another person in the country for processing. It is allowed without paying the duty. You have imported the raw material, you avail the duty exemption, duty deferment under the scheme. Now the goods are going out of your factory for the job worker. Though it is going out of your factory, government is telling you need not pay the deferred BCD and IGST at the time of goods sending the job work. You can pay at the time of selling your finished commodity. Another important clarification: you have imported the capital good, you availed the duty exemption, BCD and IGST at the time of import. Now you are sending the capital good. Now you are sending the capital good for repair or reconditioning in the local market. So that is allowed when you are sending the capital good for repair. So the customs department will not ask you to pay the payment of the customs duty and IGST, which is foregone at the time of import. So if you are registered under the MOOWR scheme, you can do the job work for the others. So they said no difficulty, but whatever the job work procedure prescribed under the GST law has to be followed. So some of the issues now we can discuss. One issue, let us say on 1st April 2021, I imported the capital good. The cost of machinery I imported is 1 crore. The duty benefit I availed. That time customs duty, basic customs duty is 10%. So 10% on 1 crore is 10 lakhs. So duty exemption I got in the month of April 2021. Let us say I am selling that capital good in the year 2016, in the year 2026. So after 5 years, I am selling that capital good in the local market. So what will happen? So at the time of selling the capital good in the market, whatever the 10 lakhs you got the benefit at the time of import, the 10 lakhs as it is you have to deposit to the government. So without payment of the interest. So this is the
రాంప్రసాద్ ఉండండి సెక్రటరీ కింద వర్క్ ఎక్కువైపోతుంది అనేసి.
So without payment of interest, you can deposit the same customs duty. So now the question here, why not the importer is eligible for the depreciation benefit? Let us say over a period of 5 years, he is eligible for depreciation of 15%. 15% into 5, 75%. So 75 lakhs is the depreciation amount. 25 lakhs is only the written down value. So why can't I pay the customs duty of 10% on the written down value of the 25 lakhs? So whether it is allowed. So this is the contentious issue. The government came forward and they have clarified that it is only the duty deferment scheme. No depreciation benefit will be allowed for paying the basic customs duty. So that means whatever the duty foregone at the time of import, that 10 lakhs you have to deposit. This clarification is somewhat contrary to the settled legal position. So here I have extracted two famous judgments in the custom law: Garden Silk Mills case and Kiran Spinning Mills case. The Supreme Court told import of goods, these judgments At length they have dealt when the import completed. When the import completed, they said import of goods into India would commence when the same crosses the territorial waters, but continues and is completed when the goods become the part of the mass of our goods within the country. The taxable event is being reached at the time when the goods reaches the customs barrier and bill of entry for home consumption is filed. So the highlighted portion is very important. The bill of entry for home consumption. Bill of entry for home consumption will be filed at the time of sale of capital goods to the buyer. That is after 5 years. So in the year 2026, when the entrepreneur is selling the capital good to a local buyer, that time he is supposed to file the bill of entry for home consumption. So that is the time when the import completes. So till the time the factory is deemed to be a customs bonded warehouse, it is deemed to be a customs station. It is deemed to be a customs place. So this is department is not accepting this position. They are telling they have issued a circular stating that depreciation benefit is not eligible. So this is merely duty deferment scheme. What is the duty deferred at the time of import? You have to pay at the time of selling the capital goods in the local market. So this is one contentious issue. The court has to determine whether the depreciation benefit is eligible for the importer or not. Another important issue, suppose you have imported the capital good on 1st December 2020. You filed the warehouse bill of entry. You took the goods into your factory without payment of customs duty. After 2 years, you are selling the goods in the local market. After 2 years, you are selling the goods in the local market. In between, government introduced the duty called corona duty. Government want funds. They want to impose the new tax on the import. So at the time of your import, corona duty was not there. But at the time of selling of the finished commodity or selling of your capital good, that time government introduced the new tax. So since new tax was introduced before your sale, you are liable to pay the new tax also. So this is settled by Supreme Court in similar context. So at the time of import, anti-dumping duty was not there. At the time of filing the warehouse bill of entry, anti-dumping duty was not there. When at the time of taking the goods into the factory premises, at that time anti-dumping duty was not there. But anti-dumping duty was introduced in between. By the time you are filing the bill of entry for home consumption, the government introduced the anti-dumping duty. So Supreme Court said, though this levy was not there at the time of import, but when you are filing the bill of entry for home consumption, that time this duty, by that time this duty was introduced. So therefore you have to pay the new duty also. Suppose at the time of import, customs duty rate is 10%, but at the time of selling your commodity, the customs duty is 5%. So what rate has to be paid? Whether earlier 10% or today rate is 5%. So section 15 of the Customs Act is telling the rate prevalent on the date of filing the bill of entry for home consumption. So today you are selling the goods from the bonded warehouse. Today you are selling the goods from your factory. So what is the rate relevant today? That rate is to be applied for your transaction. Another important issue, the other incentives. There may be state industrial policy giving a lot of incentives to the entrepreneurs, or the STPI software technology park, they are giving some incentives, or some other let's say foreign trade policy is giving the incentives. So what is the impact of the other incentives? if I opt for this MOOWR, what will happen to all other incentives? So the government said, as long as there is no restriction in the scheme, the other benefit is also can be claimed. As long as there is no restriction in the present MOOWR, as long as there is no restriction in the other scheme. The one benefit we discussed is the duty drawback. If you go to the duty drawback notification, the duty drawback notification says if you are applied for MOOWR scheme, you are not eligible for the duty drawback. That means the other scheme, duty drawback scheme, is putting a specific restriction on you. Once you applied for MOOWR, you are not eligible for duty drawback. Like that, as long as there is no restriction in the other schemes. So though you are in the MOOWR, you can avail simultaneously other benefits also. The other challenge is input-output norms. For some of the products, it is very difficult to determine the input-output norms. So small space, small nut and bolt, it is very difficult to identify the input-output norms. As I said, though I am using many times manufacture, so the understanding of the manufacture under the STY laws is not applicable. So any operation on the imported goods is a manufacture in the scheme, because it says manufacture and any other operation. Even if you do small repacking, that is also any other operation you are allowed. So that is how the traders are also eligible for the scheme. Even small operation, that is also allowed in the scheme. You are eligible for the benefit of the scheme. So whether service industry is eligible, any service industry, if they are predominantly dealing with the goods, if they are predominantly depending on the goods, they are also eligible for this scheme. So example could be, let us say you are engaged in the business of repair, maintenance and warranty. So during the course of providing a warranty, you are supposed to use the spares. So there are many people in Vizag, they are importing the spares from the foreign country. They are importing the spares in the foreign country. They are putting the spares in the godown. Whenever they are going for warranty, they are using the spares for the warranty services. So they are also eligible for the benefit of the scheme. So the additional cost for this scheme is you have to take the insurance coverage for the goods, because goods, dutiable goods, you are not paying the customs duty. So you are storing the goods in the warehouse. Suppose if any theft or any accident, fire accident happens, who will pay the customs duty? So that is the reason this regulation is mandating that you have to take the insurance coverage for the goods, for the imported goods, including the customs duty and GST portion. Traders part I have already told, they are eligible for this benefit only for 90 days. Another important issue here, warehouse to warehouse transfer. Let us say Mr. X, he opted for the scheme, he registered under the scheme. Y also opted for the scheme, registered under the MOOWR scheme. Now Y imported the raw material and he is selling as it is to the Mr. X. So he imported and is selling the goods as it is to the another person who registered under the scheme. So this is called warehouse to warehouse transfer. This is called bond to bond transfer. So this is allowed. So you have availed, Mr. Y availed the BCD and IGST at the time of import. Now he is selling the commodity as it is to another warehouse. So this is allowed for A. He need not pay the BCD and IGST on imported material. That the burden is shifting to the enterprise X. So the receiver of the goods, now he is liable to pay the BCD and IGST to the government in future. So the question here is, okay, the customs law is allowing the goods from one warehouse to another warehouse without payment of BCD and IGST on the imported raw material. What will happen to the sale transaction? It is a sale transaction. Warehouse X has to issue the tax invoice. He has to pay the GST to the government because it is a sale. Once it is a sale, it will come to your profit and loss account. Once it is a sale, it is a supply. The warehouse Y is liable to pay the GST to the government department. So here, the crux of the issue, there is a separate entry in the Schedule 3 of the GST Act. Schedule 3 of the GST Act. Para 8A, it says Schedule 3 deals with the transactions would be considered as a no supply. There are many transactions. One transaction, they are telling it will not be considered as a supply for the purpose of the GST law. What is the transaction? Supply of warehoused goods. Supply of warehoused goods to any person before clearance for home consumption will not be treated as a supply under the GST. That means raw material stored in one warehouse, if it is sold to any other person who is also registered under the bonded warehouse, that the sale transaction will not be considered as a supply for the purpose of the GST. So customs law is giving the benefit of BCD and IGST on import. So the seller need not pay. GST law is also giving the immunity, saying that this will not be treated as a supply at all. So warehouse to warehouse transfer, raw material, capital goods is allowed without payment of any taxes to the government. So this is also biggest advantage. One more example, Mr. Y, he imported the raw material, he manufactured the finished product. Now Mr. Y is selling the finished product to Mr. X, who is also registered under the MOOWR scheme. So it is also bond to bond transfer. It is also warehouse to warehouse sale. So what will happen in this case? So the customs law is dealing about the goods imported, the BCD and IGST on imported raw material. So they can give the exemption on the imported raw material, not on the finished commodity. So ideally, when Mr. Y is selling the finished commodity to Mr. X, he should pay the BCD and IGST, which was availed, duty exemption availed at the time of import. Sale invoice. Now Mr. Y has to raise the sale invoice on Mr. X because it is a sale of finished commodity. Sale of finished commodity is a supply in the GST. So he has to raise the supply invoice. So this entry, Schedule 3 entry, para number 8A, whether it will apply even for the finished commodity. So my answer to this question is no, because the para number 8A is talking about supply of warehoused goods. Supply of warehoused goods, if it is transferred to another warehouse or sold to another warehouse, that is not a supply transaction. They are not talking about the output. They are not talking about the finished goods. They are talking about only raw material. So goods, raw material imported by one warehouse, if it is sold to another warehouse, that will not be considered as a supply transaction. But if the warehouse, if they supply the finished goods to another warehouse, so that is a supply transaction. On the sale, they have to issue the tax invoice. So that is the reason I told, for the job work also, the entire provisions of the GST law will apply. So this is the mixture of both customs and GST, in a way foreign trade policy. So this is one of the this is one of the economic policy choice of the present government. So this is the combination of 4-5 acts. So one more point, let us say whether the scheme is entity wise or GSTN number wise or IEC code wise. Let us say you are having 6 factories in the country. Let us say ITC is having 50 factories in the country. ITC will be having only one IEC code across the country. So whether the scheme is factory wise or GSTN wise, GSTN wise means what are all the factories ITC is having in AP. All that factory, let us say 5-6 factories located in AP. For all the 5-6 factories, there is a one GSTN number. So this scheme is for GSTN wise or IEC code wise, or let us say company wise, SIN number, company registration number across the country, one company, many factories. So how this scheme is going to operate? So we will take the small example. One company is having a factory in Vizag, and same company is having one more factory in Bezawada. Two factories, they are making different products or they are making a single product. So two factories, they are maybe covered under the single GSTN number, or each factory is having their own GSTN number. Both the factories are covered under the one company registration number. So this scheme is going to be applicable factory wise. If Vijayawada plant apply for this scheme, that does not mean that Visakhapatnam plant also should go for this scheme. So this scheme is going to be applicable from the factory wise, not GSTN wise. So the company may have 6 factories in AP, one GSTN number. It is not that one factory opted for the scheme, same GSTN number, all other factories also should opt for the scheme. So it is not like this. All the 6 factories independently they can analyze whether there is any use of this scheme to them. If they feel that is useful, they can opt for this scheme. Otherwise, only one plant will opt for the scheme. Balance 5 plants will ignore this scheme. So with this, I completed the discussion. Now hand it over to the madam. Hello.
Sir. Members, any queries?
Sir, I am having one doubt. Anil sir,
Sir, sir.
ఇప్పుడు because government wants to reach 5 trillion economy, is it not? So accordingly, they have given the benefits to MSME sector also. For Atmanirbhar scheme, they have given the benefits. Whether those benefits also will be covered under the MOOWR 2019 or those are different.